All right, welcome back to the BitCorn Podcast. We are joined today by Nate Heinrich. He is founder and CEO of Land Ledger. So Nate spent 28 years at John Deere across 4 continents, from Northwest Texas dealerships to Singapore, Germany, and the invention of Deere's first fully autonomous farming machine, before leaving a director-level role running a $2.3 billion global aftermarket business to found Land Ledger in January of this year. So we'll talk with Nate about Land Ledger, which is building frictionless marketplace for tokenized agricultural loans. Nate, thanks for being with us.
Thanks, Kevin. Great to be here.
So, Nate, you spent 3 years at one of our top brands in agriculture, probably one of the top brands in the world, John Deere. Worked all over the world. So what were some of the formative experiences that shaped how you think about agriculture, technology, and finance that you ultimately bring to Land Ledger?
Great question, Kevin. Thanks for that, and thanks to you and Cael for having me on again. So yeah, I spent over 28 years at John Deere and had an awesome career there. Great company, great people, and one of the, I think, best things about working at Deere is you're able to have a lot of different experience and different functions in different parts of the world. So if I had to chunk my career into different pieces, I started off calling on John Deere dealers in West Texas. That was my first role. So on the aftermarket side, so helping dealers with parts and service. Then I switched to technology product management. I'm going to date myself a little bit, but John Deere was forming johndeere.com for the first time. That sounds really funny, but it's true. We had a rudimentary website up and they wanted somebody with field experience that was actually out calling on dealers and farmers to help come shape what johndeere.com would become. So I did that and then created our first online parts ordering website called JD Parts and did some other technology product management things. And then again, career development at Deere is awesome. I will always plug that. And I said, I want to move to Germany and get international experience. At the time, I think it was 2006. I was 30. And they said, okay, cool. Let's do a 2-year assignment. And so I moved to Germany for a couple of years and worked out of and still is our basically Europe headquarters. So I did that, and then I came back to the US and I spent time in customer support, which means you run all the parts and service for a specific factory. And at the time, it was our precision ag factory called AMS. Now it's called Intelligence Solutions Group, but we ran all of our Green Star GPS, all of our displays, and auto track. A lot of people refer to it as auto steer, but I ran global customer support for that. So I ran the call center 24/7, ran all of the preparedness for new product releases and so forth. Then I switched to marketing and moved to Singapore and ran what we call our strategic marketing group across basically China, Southeast Asia, India, and Sub-Saharan Africa. Did that for a couple of years. Moved back to the Des Moines area and was responsible for precision ag marketing at this time. Before it was customer support, then it was precision ag marketing. And in addition to that, our global ag equipment innovation teams, where basically those teams it's really cool. They're small cross-functional teams with marketing, agronomy, hardware engineering, software engineering. You've got a budget, you've got a problem to solve, you're in the field, and you iterate rapidly. And so, and I moved back to Germany and was responsible for the John Deere dealer channel in Europe for 2 years. Back to the US, responsible for one of our largest aftermarket businesses that we have, and thoroughly enjoyed all of it. And so those experiences combined give me a very broad perspective of different types of agricultural businesses and functions globally. And so as I looked at this opportunity, I've been a landowner it's not a long time in many people's eyes, and it's not a long time, but a dozen years, which is a rookie compared to potentially a lot of the listeners and families, et cetera. So no disrespect there, but for about a dozen years. But I've also been in digital assets, crypto for 13 years. And I always thought they would come together because as I got into land, I just came to appreciate even more the size of the asset class and the fact that 85% of the land is owned debt-free, unlevered, but it's very illiquid compared to other asset classes. it's fragmented, manual, sometimes paper driven, wet signatures, um, different in county recorders offices. It's very, very fragmented and illiquid. So I thought to myself, well, digital asset technology is a great way to help unlock that asset class and unlock liquidity. And I like to think about, Land Ledger's mission is to unlock liquidity to create generational prosperity. Because I firmly believe that. I believe land is the best real world monetary grade asset class in the world. So I made the leap in January to start Land Ledger to figure out ways to be able to do that.
Wow. So you touched every single part of the industry, it sounds like. And then, from what I've heard from Kevin, you bought Bitcoin for the first time in 2013. And it's interesting, the parallel Kevin and I have been running with ever since Vance Crowe and Zach Smith brought it up was comparing land to Bitcoin. Land is the real world asset. Bitcoin is the closest digital asset to land. And so you had the idea to put those together and make it liquid. And that's the problem it solves, right?
Very
So,
similar. I'm just
go
jumping.
ahead.
I totally agree. They had very similar characteristics, right? You've got a scarce, resource, scarce asset. It's verifiable. It's pretty immutable. Yeah, you can like remove land, like farmland in particular, but you can't really change it a lot at scale. What land has over Bitcoin or even the US dollar is stability and appreciation. And that's why I think the characteristics of land are, in a lot of ways, better than money. And I think with potential challenges of US inflation because of our rising debt, that land will continue to be a very and even greater valued asset.
Wow. Well, so you created a land protocol, right, to unlock that capital by standardizing the data. But I'm kind of interested in, I don't assume that you had studied land a lot or what was going on with land. Was that when you bought your first farm ground 12 years ago that you realized the main friction points?
So the reason I got into land, besides working with people that work the land, like my entire career,
Yeah.
is I talked to Steve Brewer, who's the president of People's Company here in central Iowa and Cumming, Iowa. And Steve and I started thinking through ways that blockchain, crypto, digital asset, many names, could potentially unlock land liquidity. And because Steve's, if a lot of maybe listeners may know him or not, he's very innovative, one of the most innovative leaders in the industry. And as we started doing that, we started investing in land together. And that's where I really started learning more about the asset class, the ins and outs, and that type of thing from Steve. So that's really where that all started. And our Land Ledger offices are out. We work out of the People's Company office here in central Iowa.
Yeah. Thank you for the tour as well.
That's right. Yeah, we got the land report pictures right behind me, which is a great land related publication.
So you've run your first pilot program. Can you describe that and kind of how it works technically? Actually tokenizing land and taking out a loan against that as collateral.
Absolutely, Kevin. So I'm going to back up slightly. As I mentioned earlier, my experience at Deere was running cross-functional agile teams that try to learn as much as possible and spend the least amount of money doing it to hit the bullseye. And so that's been my approach with Land Ledger. My original hypothesis was that we are going to utilize blockchain infrastructure to make the existing land finance value chain, if you will, more efficient. And as we've talked about it, that's like my goal. What you guys are doing is an end around even on that, which is super exciting. But I'm trying to really make the existing land finance chain tremendously more efficient. And the original hypothesis was that would be on the collateral side, on the land side. If we can tokenize the land, that provides us many more options. And I do think long term that is still the case as tokenization becomes more sophisticated and regulations become more clear. But what we did in our first, let's call it proof of concept, is we tokenized a 20-acre farm from central Iowa here and deposited that as collateral. It's built on the Ethereum Coinbase Layer 2 blockchain called Base. And so we tokenize it on Base, we deposit into a Base vault, and a loan from Bank Iowa was issued against that. So when it was settled, the loan goes active and the collateral cannot be retrieved from the vault until the loan is paid off. We want Land Ledger to be 95% non-crypto. Like, people that use it don't really even need to know that we're using crypto or blockchain. That's not like that important. I say this a lot, but Jeff Bezos didn't go around asking people if they want to buy a book on TCP/IP. Like, nobody cares what the protocol is. Just like, make it easy for me to order a book. And that's what we're trying to do. Crypto, blockchain, it's just a financial protocol is the way that it really should, and needs to be put in the background more. So when we did our first proof of concept, we used a company called Stripe to be able to have the bank just use a regular bank wire in US dollars, and we automatically converted it into a stable coin to do the settlement. And then the borrower just wired out the money. And so they didn't even know that they were using a stable coin infrastructure to settle the loan. So we learned a lot in that, and there was a lot of friction in that. And we knew that. We knew we wanted to send one through the chute. What did we learn? What assumptions are right? What are not? Where are the bumps and bruises? And we learned a huge lesson, which is the efficiency at this stage is not on the collateral side. It's on the capital markets side. It's on the capital side, on the lending side. That is really way more efficient. The regulations are clear, and we can make a really big difference there. And so our release announcement that we came out with last week really focuses on this capital side.
That's cool. So, and I don't know if you want to go into this. We can take it out if you don't want to. But you went into the capital side. You've explained in private to us a little bit, but you have a tranche structure, right? Junior and senior layers. And for our audience that understands commodity risk but might be new to structured credit, what can you tell us about that?
Yeah. So in the new model that we announced it last week, and we're going to go live here in a couple of weeks, is landowners, borrowers can come onto the platform and essentially apply for a loan. And there is really not a whole lot new about that. It's traditional lending. There's a mortgage, there's a promissory note. That is all traditional securitization of the collateral. We don't need to get fancy there. That needs to be straightforward, and that is the case now. And so that is very straightforward. You can come and apply for a loan on the platform. What's different is on the lending side. When a loan is submitted, a loan application is submitted to the platform, we publish it to a bid board. That way, lenders can come in and they can bid on different tranches of the loan. So the most senior secured A, up to 30% LTV, the next secured B, 30 to 50% LTV, and C, 50 to 60, on so on and so forth. And so what that allows lenders to do is gives them flexibility on where they want to participate. They can participate across, do a whole loan participation, or they just want to take the senior secured A and propose and bid on a little bit lower interest rate. Or if you want to go 60 to 70% LTV and look at that tranche, you can bid a higher rate and get a higher return. As we all know, investing and lending against land is not risky at all compared to other asset classes. Like the net charge-offs, even during the financial crisis of 08, COVID, et cetera, the net charge-offs are like 0.1%. Doesn't even really register. And so that exemplifies why we know, and it behaves like a monetary grade asset class. But so these 4 things we announced last week, we've got a bid board where lenders can bid on the loans. Number 2, they can bid on tranches. Number 3, we tokenize their participation in those tranches. That's what's moved. Instead of tokenizing the land, we tokenize their position in the tranche. And so those are basically digitized loan participations. That's the third thing that's never been done in this industry, which is huge because what that now enables is secondary liquidity, which is our fourth feature. So when you essentially buy and lend against a loan participation, you can then turn around and sell that if you want over the life of the loan to secondary liquidity, like Farmer Mac as an example, if you want to get that loan off your books. One of the pressing problems right now with a community bank, like an ag-focused community bank, is a lot of their loans stay on their books for the life of the loan, 10, 20, 30 years. And they don't have secondary liquidity. It's not easy to get secondary liquidity. So their liquidity ratios aren't in a great position. And so what we're doing is we're trying to work with other industry players to enable that secondary liquidity marketplace, which speeds up the entire finance value chain back in all of these loans. So for a landowner, it's great because we can get them a loan, in faster time, 20 days versus 60 days. The loan will be competitive, so hopefully a lower rate, a market-based rate, and it just gives them more flexibility. If they come back and they say, well, we requested 60% LTV, but the bid up to 50 is really good, so I'm just going to take up to 50, right? So it just gives everybody a lot more flexibility. And then on the capital side, it allows them to manage to where their business needs to be if they want to get some loans off the books or they want to buy some loans. It makes it a lot more efficient, the overall structure.
Yeah, and I'm no expert in kind of high level capital, but commercial real estate projects, large residential like apartment buildings or whatever. I mean, there's the same sort of tranching that you talk about happens there all the time, and so different banks will choose different things depending upon how they want to deploy their capital.
That flexibility does not really exist in ag, and
that's what I was going to say. In
incredible.
Agriculture and land, it doesn't. Even though, as you say, it's one of the most pristine asset classes from a risk perspective of anything. I mean, the risk compared to an apartment project, it's like not on the same level.
It's not the same level, and it's amazing this infrastructure is not in place because people listen to this podcast. We're doing traditional lending with a digital layer over top of it. It's not scary. It's literally we're digitizing how the value chain works on the capital side. And this is done every day, all day in like commercial real estate as an example. And so, but they have, a traditional digital infrastructure, like let's call it the landline. What we're doing is we're skipping all that and going straight to blockchain to revolutionize the ag piece. And it amazes us that when we look at different bonds that are sold to fund a lot of the AI plays from Google or Amazon, et cetera, people are buying these bonds at like 4.6%, et cetera, against a risky AI data center project when you can easily get 5.5 lending against land. It doesn't make a lot of sense. So land's time has come, in my opinion. Like the Web 1.0, 2.0 did not do anything really for land. Maybe you can like look at some soil maps and do all that stuff, but in terms of the land asset class, the land is built for blockchain and Web 3.
Yeah. I have a friend who's deeper into understanding kind of what's going on with financial rails. And so I think another point for the audience and the point, Nate, that you're getting at is that kind of this ground beneath how capital moves, it's shifting to the blockchain. And again, if you're an average consumer, at some point, you're probably not going to know that that's happening. But yeah, he told me this within the last couple of weeks that right now, stablecoin dollars are at $25 billion, which is about 1% of total dollar volume in the world. He thinks that's going to double or triple in the next 12 months. So there's a lot going on. How do you think about kind of financial rails and how they shift and how land ledger fits into that? What are the implications for agriculture, whether it's land or even beyond?
Yeah. So at a macro level, there's a collision and integration going on from what I've seen. Until the Genius Act was passed, I think it was literally last July. So like a year ago, like right around a year ago. And the Genius Act, for listeners that don't know, is a law that was passed to legalize stable coins. And that basically is a digital representation of a dollar. So it's really easy to, move the money and pay and settle and faster and global and all that stuff. That was passed a year ago. Before that, it was, crypto people and doing projects and try to rewire financial infrastructure, but you didn't have, it was more just private credit type and private. Now you have banks able to get more involved and more regulated institutions get involved. And so I think there's a kind of a Lego thing going on between which native crypto companies are going to play ball with institutions and which are still going crypto only. And it's kind of like, we're going to see how that all plays out. It's very interesting. So you'll see announcements from companies like Morpho, Centrifuge. So Robinhood chain is going to make a big splash here because Robinhood just announced their own chain, which competes with Coinbase's base too, but they're all about real world assets. So there's going to be a tidal wave of institutions and regulated players coming on. Like it's happening right now, like this week, next week, constantly right now, which is going to rewire the financial plumbing. And so the way that I look at this for Land Ledger is we want to be an infrastructure player here that enables these players like an ag community bank to access liquidity. And so our liquidity is going to come from a bank itself. It can come from private credit. It can come from on-chain called vaults, on-chain vaults, which a lot of them are either funded by on-chain finance or funded by a larger institutional player putting money into these vaults that you can access.
Would you call that like a curve?
Excuse me?
Curve,
yeah,
maybe like Curve Financial.
Exactly.
Yeah,
Like a decentralized on-chain lending mechanism. And so, but I think that's all going to get blurry. I think you're going to have on-chain native capital coming in. You're going to have BlackRock coming in, JP Morgan. It's going to meld together. And I don't think consumers should really care that much as long as things get faster, lower cost, and more flexible. And that's what's going to happen. And so the technology needs to move to the back, and people just need to see better financial products like we're trying to do, like really easy to use, lower cost, and faster and more flexible.
That's awesome. Just real quick, so we know a little bit about how you got it, because you're deep into blockchain, Nate, and like when did you graduate from Bitcoin? Were you just keyed in the whole way as like Ethereum came on and everything else, and you've been following blockchain technology this whole time, or did you have this aha moment and then dive back in? What did that look like?
I'm going to give an example because I know the moment that I realized that Ethereum, or basically a programmable blockchain, was going to be a big deal. This might sound cheesy, but I was riding a car in South Africa on a business trip in 2014, in February of 2014. I learned about Bitcoin in December of 2013. I read Mark Andreessen's op-ed in the New York Times, which is, I think, a great thing to go back to for inspiration. But I was in a back of a car, and I was riding in South Africa. At the time I was in Singapore, so that was part of my region. And I was reading an article. It's a long trip because there's a lot of distance in South Africa. I was in the car for a long time. And I read, I think it was called Colored Coins at the time. And it was basically Vitalik Buterin's first idea around a programmable blockchain. and where you can create apps on it, essentially. Bitcoin, it's very difficult to create apps on top of it. It's a great immutable infrastructure that is the kind of the foundational king of blockchain, but it's slower and hard to create apps on. And so Vitalik came out with this deal, and then Ethereum came out, I think maybe under a year later. But when I read that, we're all used to iPhones and apps, and basically Ethereum I saw is like an iPhone where you can create apps on top, financial apps on top of it. And so ever since then, I've been a huge fan of Ethereum. I've kept my eye on other blockchains, of course, but I really like the ethos of Ethereum. I like to see Robinhood Chain continue to build on it. But what else is cool is you could easily do multi-chain. Your apps, even if they're built on Ethereum, there's so many integrations with other blockchains. It's all interoperable, which is one of the key characteristics of crypto is interoperability, exchangeability, composability. It's interoperable. You can kind of make Legos out of it. You can create different financial products. It's, as I like to tell people, once you get either the land asset class or finances related to land, like, well, what do you want to do with it is the question, versus it's like literally, what do you want to do with it? You can program it to act and behave how you want within a regulatory framework.
Yeah. That's awesome. Well, I mean, how much do you have to wait? We're talking about regulatory stuff coming out, and I guess we're kind of trying to figure this out for ourselves and just keep moving while the gray curtain is still up. But how much do you have to wait on all this regulatory stuff coming out?
So right now we're designed to fit within existing. Okay. Our products right now are well within the regulatory framework because we are an agent. We're not a borrower or a lender. And we have the legal agreements that allow us to execute on the behalf of a lender. And we have a standard, I call it the legal stack, not the tech stack, but we have a standard legal stack of a mortgage, promissory note, a lending agreement, a master participation agreement, the loan participations. Those are all common things that exist today in the paper world. Again, traditional, but we're putting a digital layer on it. And even our settlement bank wire, but we use an API to know who's paid who, when, where, how much, and all that. Now, when the Clarity Act hopefully gets passed, please go ahead.
Real quick, does all of that information tie into the smart contract?
Yes. Yep.
Okay.
Yep. Beautiful. And it will more and more. Now, we don't put any personal identifiable information on there. That's not what we're doing, but transparency of the blockchain on, the loan, the status of the loan, how many tokens participations are out there, what the principal and interest is left on them, all that stuff, all on the blockchain. Yeah. And that's why we created, as you said earlier, the land protocol, which is what Land Ledger uses to as a standard to document the land transactions on blockchain. And it's an open protocol for anybody to use. We just want to try to standardize that. So as we go forward, 5, 6, 7, 8 years from now, even when land transactions are settled at county recorders, it would be great, and title companies, it'd be great to use the land protocol, because then everything becomes, the same standardized language.
Yeah. So one of the first things that got me really excited when I got into blockchain and whatnot, like 6 years ago, was like, yeah, I can go right now, Nate, and go on Basescan and read your code for the land protocol, can't I?
Yeah. Oh yeah. Yeah.
That's
it's
great.
all out there. Yep. I think this whole movement is also great with transparency, because when we put a loan on our platform, like people will understand what loans are going for. It's a marketplace, and we're gonna communicate that. And that's never been. It's always been, fairly private, and so people are going to understand what is a XYZ loan going for it at 50% LTV. Well, the market price is on Land Ledger.
It's going to be a lot harder to form a conspiracy theory about you than it is about JP Morgan.
Yeah.
Well, just the effort is taken for land investors to get information. I mean, Iowa State's agricultural land survey is a thing for a reason. Like, yeah,
Sure.
maybe it won't be for too much longer.
Yeah. Information and transparency are huge. And so I'm looking forward to, with what you guys are doing, with what we're doing, just bringing more digitization, speed, lower cost, flexibility, transparency to the ag value chain, finance value chain in particular. And it's going to happen. It's happening now. So
what do you think the next 12 to 18 months look like as you continue to ramp up?
yeah, so the next 12 to 18 months are to get we have a certain amount of land-backed credit loans that we want to achieve on the platform in the next 18 months in particular. And by 2030, we have some very big goals to be able to do that. The number one thing that we are doing now is we're recruiting and onboarding lenders, capital partners, to get comfortable, familiar, and start funding loans on our platform. And so we're talking to all types of different capital, from community banks, family offices, institutions, U.S. based, international based. It really doesn't matter. So that's our
I was going
focus
to
right
say,
now.
I have to imagine that you have some people that are relatively new to thinking about agricultural land as part of the unlock.
Yeah, great point, Kevin. And the reason I say that is some of the groups that we've talked to they're very big players, global players that maybe aren't huge into land. One meeting in particular I'm thinking of, we prepared a lot to talk to this essentially $1 trillion asset manager. And we prepared a lot to convince them that land was a great asset class and to convince them that tokenization was a great way to interact. We had to spend less than 30 seconds on that. They were locked in to the land asset class. They call it HALO, hard asset, low obsolescence. Like a lot of the large private credit groups, right? With software, their private credit funds are being challenged right now with withdrawals because of the volatility that AI is creating in a lot of their credit opportunities and funds. But now, so they're moving a lot more to like asset classes like land and even like ag equipment as well. So land was a next topic. We are totally believe in this asset class, and tokenization, next topic. We get it. It was more about how fast can we get into land? Like, what is your volume? And we were, it was more like, can you bring billions on? And so that was an interesting conversation. But and then as well as international players, a lot of U.S. land, farmland in particular, is one of the most sought after asset classes. And instead of the challenges of foreign investors buying Iowa farmland, no reason they can't lend against it, which is a similar exposure for a decent return.
That's interesting. Yeah. I mean, I flash back. It was nothing came of it, but a friend of mine who's an investment banker from New York, but hails from China, created a conference call with a company from China who creates dairy goat milk products. Anyway, the lactose intolerance thing in Asia, of course, is a big deal. But they're looking for new places to do it. And we have sort of this nascent dairy goat production area in Northeast Iowa and Southwest Wisconsin. And I had brought some people to the table for that. But I could not get the CEO to talk about business model because all he wanted to talk about was, I can buy Iowa or Wisconsin farmland, right? It's like, no. Like, anyway, it was just interesting. But yeah, you open that up. And then if I put myself maybe in a U.S. capital allocator, yeah, and I think about now them having these private credit funds, they're having to lock down withdrawal. It's like, well, what sort of a fund can I deploy billions where people won't freak out? Yeah, agricultural land, I think, would float towards the top of that list.
Absolutely. So, and it's hasn't changed. I mean, it's um, and we all know it that are involved with land. We've known this, but I really, again, as I said before, I think blockchain is going to illuminate the asset class even more as people want a good diversified portfolio and participation on blockchains. They're not going to put 100% in, but to basically anchor on-chain vault or something like that, land is where the money's at to basically create a great foundation for what people are doing in crypto. So we're looking forward to. We've got a lot of interest and looking forward to see. We're trying to uh, figure out where we're going to hit the bullseye with different types of capital, and it's been a great adventure.
But the pitch deck doesn't need anything to convince on farmland as an asset class.
Less than 30 seconds. Next slide.
Lesson learned.
Yep.
Ugh.
Ag equipment's the same way. Ag equipment's not far behind. People that we've talked to, they ag lending in particular, because farmers, landowners don't default. You may have some delinquencies, but the net charge-offs are absolute minuscule, which just speaks to the awesomeness of the ag industry. Ag equipment also gets a lot of attention. People are asking us to do the same thing we're doing with land with ag equipment. And so that's the background I come from. So you may see us do something there in the next year. We'll see.
How much, I mean, when you think about it from a macro perspective, how many basis points can we remove from the average loan for agricultural land or for agricultural equipment?
Great question. So the ag finance value chain is one of the more inefficient finance value chains out there. We estimate it's 100 to 200 basis points more expensive than other finance value chains. And depending on how our competitive process goes, we think it's 100 to 200 basis points, at least 50. It will depend. But because we still have all of the steps and the players in the value chain with, let's call it, the fragmented manual processes, we've got more people in the chain with less efficient processes. We're trying to collapse all that. And so we think we can get very competitive with, commercial or residential. And so we'll see. But depending on, there's estimates that it's as high as 300 basis points, but I'll say 100 to 200. And depending on how it shakes out, we can get 50 to 100 basis points. 100. We'll see where that lands. But it is more expensive than the related value chains, let's say.
And for what it's worth, we're early in these discussions too, but about tokenizing other assets. And it could be future grain production. It could be existing grain inventories. It could be existing livestock inventories. And again, we're way earlier into the process, but what surprised Cael and the BitCorn team is how interested outside parties are at deploying capital in agriculture, which is good news for us as an industry because, yeah, to your point, 1 or 2% interest is real expense.
Yes. Yeah. Absolutely. We've received no pushback that we're in the ag-related industry. Actually, it is, as I said before, its time has come in terms of global capital markets, and it's because of the volatility in the world and the government debt in the world, as well as the technology is here. And the agricultural industry has a great credit background. Again, I have some charts that are amazing because you look at the bar charts and you're like, well, where's the ag net charge-offs? Like, will you see that little bar that is barely above the x-axis? Like you can't zoom it in, and then you've got commercial and you got all these other asset classes and the net charge-offs, and you can barely see it on the charts. And that's, again, with what I'm dealing with, it's land and equipment. It's awesome. Makes you proud.
And it is interesting it's interesting because the reason there isn't a high default rate certainly has nothing to do with like a high margin structure. It's like, it isn't because agriculture is profitable all the time, much of the time. It's, the utter persistence and longevity, long-term orientation, trying to do things the right way, orientation of most of the people in the industry.
Yeah, and additionally, that's a great point, Kevin. And additionally, it also speaks to a lot of the integrity and quality of the community banks that will stand behind a customer because they know them. Again, they're not going anywhere with the land. It's right out there. I mean, it's like Bitcoin. Like, we know that land's not going anywhere. But seriously, the community banks play a huge role in this, because they stand by a customer through some delinquencies and create some different options. And we're trying to give them even more options as a community bank to deal with liquidity themselves. And so it's a great point that you made, and I think it speaks to the industry as a whole.
Well, I asked you to think about 12 to 18 months out. Maybe if we zoom forward 10 years, what do you think agricultural finance looks like? And we can go at whatever level you want.
Wow.
We've got
Yes.
the plumbing that is sort of our financial rails. It's all changing and being digitized, and we've talked about that. We've got larger issues, to say the least, of sovereign government debt that looks like a meteor that's going to strike. Anyway, something happens. And so in the Bitcoin community, people talk about fourth turnings and all kinds of things. We don't have to get into that necessarily. But yeah, we're all long-term agriculturalists here. And no matter what happens with the financial rails and money, agriculture is going to be around one way or the other. People have to eat. But how do you think about the long term, and both from like a land ledger perspective, certainly, but just the overall financial system for agriculture?
Yeah. So big question. I would say that you have to start macro, and the U.S. government debt is a massive problem. We're going to hit 40 trillion here in the near future. And if you look at history, I'm not sure any country has come back, or their dollar being the world's reserve currency has come back from where we're at right now. And so that's really scary, and I don't like it personally. And it's not a political. No party is solving this, and it's a no empire in history has ever solved this. It's the whole debt spiral thing. And so, given that, if I still have faith that we can turn it around because we're the U.S. But if we look at history, we also have to look at what happens if that becomes a real issue, which basically it's inflation. Even today, and the 10-year Treasury keeps going up, and our government debt, the cost to serve that debt is over $1 trillion, and that's just how this happens. And so when that happens, the place to look at is hard assets, and that means land, gold, and Bitcoin in my book. And so, given that, and given the trend of autonomy, autonomous equipment, and robots, and those types of things, I think the cost of production is going to come down significantly. Like, if you look at today, farmer buys a tractor that's $500,000 and they use it 5% of the hours in a year. There's 8,760 hours in a year. And 400 hours is actually a decent amount of hours on a $500,000 tractor. The other 8,300 and whatever hours that are in the year, it's sitting in the shed and it looks great in there, just sitting there.
Proverbial bird's nest.
Yep, it's sitting in there. And so I think with autonomous and digitization, we can increase the utilization of ag equipment from 5 to 50%, 50 at least. And so I think the cost of production is going to come down. I think the land asset class, the value is going to go up. And so if we can create more liquidity around both of those situations, that creates what I said earlier, generational prosperity around an asset class that will be one of three that people will race to as government debt increases and inflation goes up, because land's positively correlated with inflation. So that's what I see 10 years from now is there's going to be multiple industries and focus points on land and agriculture. And I think it's a great place to be today. It will only get more important in the future.
Isn't it poetic that AI is turning everyone into ag? It's like Kevin Warsh at the Fed is like, oh, AI is going to cause a productivity boom. No, Nate Heinrich's going to cause a productivity boom in agriculture.
We'll see. We're trying to make that boom the financial infrastructure for people to, and so are you guys, for people to actually be able to take advantage of that boom that I think is going to come.
Yeah, you talk about expanding margins basically by cutting out BIPs, and that was one of the first things we looked at. Well, how can we use Bitcoin to expand our farmers' margins on their financial products? I'm very excited, and I think that the community is gonna get into Bitcoin. And think about if there is a productivity boom, how much more capital will they have available to start putting into Bitcoin and accumulating their own treasury, and then how can they use that to finance? It's going to be great.
Yeah, if you look at it, we're not built on Bitcoin. You guys are, but if you put this, I named two of the three. Basically, you guys are playing in two of the three hard assets that I believe are going to get more and more important with the threat of government debt and inflation, Bitcoin and agriculture or land. And so I think that we've just got to, our group and your group, our company, your company, really concentrate and where we can make the biggest difference here, because the opportunities are going to come flying at us. And we're already seeing, like I said, people are coming after us for, can we do the same thing for equipment? Can we? And so and you start to say, okay, well, you break down equipment into the fundamental of like dollar per horsepower per acre, like you just get down into the actual math of it. And then you look at it's only utilized 5% a year. It just, the opportunities explode. Now, one of the issues with autonomous equipment in ag is really right now there's two jobs that can operate at night, because you got to open up the night window to really, access the 8,760 hours in a year. And really, there's two jobs that can do that right now. And probably you can do some harvesting at night with like the corn's dried down because of the dew, right? And then I think weeding is also an area that autonomous weeding, either with mechanically or with lasers. The lasers actually perform better at night. So we'll see where all that goes. It's a fun podcast. We're going off the rails here.
Well, we've seen some of those, haven't we, Kevin? I guess I've been peeking over your shoulder, stuff that are coming through your fund. But yeah, it's cool. I got to see some lasers going. How do you know that they're better at night?
I think it's like a photonic. I just read about this actually earlier today. I think I'm not a light expert, but I think the actual light is. There's a few dimensions, Kevin, you may know, but there's a few dimensions that surprise me too, that make it better when it's dark. And actually, I think when there's even more moisture, I think it's actually good too. Kevin, do you know why?
So there's UV lights that can kill certain fungal pathogens, and the UV works better at night. And then for some of the reasons you mentioned, it's better to be at night. And then, but the thing always was, the UV is fine, but the equipment has to move so slow, it's not feasible. Well, that was only when people were driving the equipment.
Right.
When it's robotic and you can let it run all night, it's like, it just works. So we've invested in a company that's like making strawberries great again.
Who? One of these companies?
Yeah, Trick Robotics. Yeah.
Robotics. Okay, interesting. Because I was just looking. Somebody sent me a note on. I think it's called Carbon Robotics is doing some laser stuff, but the electricity thing in agriculture. We could talk all day. The electricity thing in agriculture is also an amazing opportunity because like plasma technology is way underutilized in agriculture as well. You can create nitrogen just out of electricity and air, but nobody's doing that yet because it's hard to do at scale. But like on machine, but that's also a really cool area.
Yeah, essentially Haber-Bosch, but at a localized kind of a level. And maybe that's a good optimistic note to end on. I mean, I just think what these technologies do is that they push capabilities out to the grassroots. And for a whole bunch of reasons, a lot of what we've built in agriculture over the last 100 years is like centralize. And the good news is we're delivering a higher quality food product to consumers for a lesser price. So I don't want to dismiss that, but I just think America and probably the world works better when it's more decentralized, and certainly opportunity, the more that you can spread it out, it just creates a flourishing for people, and everything technologically seems to me to be trending that way, which is such good news.
Yeah, absolutely. And our farmer, landowner, customer base is like, self-sufficiency and decentralization are a core value, basically. They don't need centralized help with a lot of stuff, right? I mean, it's an amazing self-sufficient group.
Well, with that, Nate, best wishes for Land Ledger. We are big fans and are rooting you on. Thanks for taking time to share with our BitCorn audience.
Yeah, likewise.
Yeah,
Looking forward to catching up with you guys, and love what you're doing as well, and look forward to connecting again. Thank you.